It's tax time again, and that means it's time to start thinking about how you can save big on your Australian income taxes and maximize your tax refund. In this video, I've got the top tax saving tips for the 2023 tax year. So listen up and get ready to boost your refund. These tips are specifically tailored for the period between July 1, 2022 and June 30, 2023. So listen carefully as I reveal some key opportunities you may have missed or forgotten. Unfortunately, there are no changes to any personal income tax rates, and the proposed Stage 3 tax cuts are not starting until 1 July 2024. That is assuming the government doesn't cut them beforehand. Also, the middle income tax offset that you may have got refunded to you last year doesn't apply to the 2023 tax return. So to get a tax refund in 2023, you'll need to rely on maximizing your work-related tax deductions, and the tips in this video will help you do that. Missing just one tip could mean missing out on a large tax deduction, so stay tuned until the end of the video. Alright, let's get started with tip number 1. Did you continue working home during the last year? Remember to keep track of the days and hours you worked from home. Why? Well, you may be eligible for a tax deduction using the government's fixed rate method. It's easy as multiplying the number of hours worked from home by 67 cents. This method covers the cost of the business use of regular home expenses, including home and mobile costs, internet costs, electricity and gas, and computer consumables from home office equipment to electricity, heating, and much more. No complex calculations or detailed records required. Tip number 2. The fixed rate doesn't include a tax deduction for the work-related use of technology and office furniture, such as chairs, desks, computers, bookshelves. These are generally depreciating assets that decline in value over time. You can also claim the decline in value for these items each year, plus any repairs and maintenance. That's a deduction in addition to the fixed rate method of 67 cents per hour. Also, if the item costs $300 or less and you use it mainly for a work-related purpose, you can claim an immediate deduction for the cost in the year you buy it. If you buy it before 30 June this year, it could be a big tax deduction that you can get refunded to you in as early as July. Just make sure you keep your receipts and speak with your tax agent if you're not sure. Tip number 3. Even if you didn't work from home this year, there are still many tax deductions you can claim. Did you have extra expenses related to COVID tests or increased work-related travel with your car? These expenses may be eligible for a tax deduction. If you use your car for business travel, you can claim them at a rate of 78 cents per kilometre using the cents per kilometre method for up to 5,000 business kilometres without keeping receipts or having a logbook. However, you can't claim private car use normally, but if you had to carry bulky equipment between home and work, you may be able to claim those kilometres travelled using this method too. If you're not sure, keep your receipts and record of your travel and let your accountant help you determine what you can claim. Remember, payments for work-related expenses must be made before June 30, 2022 to claim them in your 2023 tax return. If your employer reimbursed you for these costs, then you can't claim a tax deduction. If you've liked these tips so far, then please remember to hit the like button to this video to let me know. If you have any questions, then make sure you leave a comment below and check out the links in the description for more videos and the ATO guidelines. Stay tuned for more important tax tips for 2023. Are you planning to make a personal super contribution to your superannuation fund? You may be able to claim a tax deduction for it. Make sure you pay it before June 30, 2023 and complete the required forms from your super fund. Contact your super fund or accountant if you have questions or need assistance. You can check your MyGov account online to see if you reach your superannuation contribution cap, which may limit how much you can claim as a tax deduction. Tip number 5. If you've made charitable donations, you may be eligible for a tax deduction. Ensure the charity is registered as a deductible gift recipient with the ATO first, and keep your receipts. If you want to make an extra donation, make sure you do it before 30 June to claim it in the 2023 tax return. Tip number 6. The ATO allows you to claim a deduction for the cost of subscriptions to share market information services and investment journals if they help you earn money from shares or bonds or other investments. Under Tax Determination 2004/1, if you pay for your subscriptions in advance by 30 June, you can claim a tax deduction upfront. Check with your tax agent if this applies to you. And remember, these journals and subscriptions need to be technically focused. They can't be general newspaper subscriptions. I claim a tax deduction each year for my subscription to Share Site, which is a fantastic online tool I use to track my dividend income, calculate capital gains tax on the sales of shares, and analyze my portfolio in real time for all of my ETF investments. You can sign up for ShareSite for free using my link, which is on the screen now and also in the description of this video. And you can save 4 months on an annual subscription. Pay the subscription before 30 June 2023 to claim the tax deduction this year. If you need more help with maximizing your tax refund, then I recommend watching the video on the screen right now. Also, this other video will also prove to be very helpful for you. Please remember to hit the like button for this video, and I'll see you in the next one.